Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and the top stories are Midcap's lag in a range-bound session on expiry day. This is after the US Fed hikes rates by an expected 25 basis points, but concerns around Adani stocks linger. Utilities energy drag, while FMCG and IT clock gains.
In a surprise move, Adani Enterprises withdraws its 20,000 crore rupee share offer. Chairperson Gautam Adani says the move will safeguard investors with no impact on the business, but most group stocks wilt on concerns. Ambuja Cements bucks the trend as pledge fears recede.
Ashok Leyland gains after posting strong results and monthly sales numbers. Revenues up 63%, 500 basis points bump up in margins.
IDFC and IDFC First Bank perk up on a plan for the former to infuse 2,200 crore rupees into the bank.
Birlasoft slides after a key client, Invacare, files for bankruptcy. Remember, Birlasoft had won a large $240 million deal from the medical device maker in 2019.
Okay, so those are the mid-cap stories that we are tracking on our show today. But as always, let's take a look at the markets because they are coming under a bit of pressure yet again. Nifty is down 66 points. It is at the lows right now. And Midcap Index, which was actually outperforming so far, has seen a sharp fall as well from the top. So that one is down 112 points and inching towards the day's low as well. Bank Nifty, which continued to underperform and has seen those levels today as well. So it's down around another 260 points at that 40,254 mark in terms of movement as well. FMCG, IT, some defensive plays which are batting for the bulls today. So those two sectoral indices are higher in trade today. But other than that, of course, the Fed rate hike, and we also have our own RBI monetary policy next week. These are a couple of factors that we'll be keeping in mind. But despite global markets being higher, Reema, overnight, our own domestic cues continue to impact our markets.
Absolutely. 17,550 on the Nifty, down 70 points. It's been a fairly choppy session today as well. But we've got a corporate waiting by to chat with us on Midcap Radar. That's coming in from the gaming industry. Now, the finance minister has announced that a 30% tax will be imposed on net winnings from online games. We're now joined by Nitish Mittersain, the founder and CEO and joint MD at Nazara Technologies. Nazara gets about 5% of its revenues from real money gaming, which is the online gaming wherein people bet money and make money. So the changes that have been announced in the budget directly impact Nazara Technology. 5% of their revenues come from real money gaming. Nitish, first, if you could just tell us, what are the changes, the tax changes that have been announced in the budget? What was the picture earlier and what does it currently stand at? And how does it change life for a gamer?
Sure. So, earlier it was about paying or doing TDS on, winnings of at least 10,000 rupees, which has now been reduced to, any winnings. But they've defined it specifically on net winnings, which is, a great clarity. So I think overall, my perspective is that it's a very positive outcome for Nazara as well as the gaming industry, as well as the consumer or the player, because there's a lot more clarity that has emerged. I think up till now, a lot of different companies are applying different kinds of TDS and players are paying in different formats and different structures. But I think this brings a lot more clarity, and that is a big positive for the industry.
Nitish, just one question. Earlier, TDS was charged on winnings, net winnings of 10,000 or any income that you generate. Could you just provide that clarification?
It was a little gray area, right? So I think different people were applying different ways to really do it. There was not enough clarity on exactly how it is to be done. And different players did different things. I think now that clarity is much more there.
Okay, so Nitish, imagine if one person is playing 10 different games. In 8 of them, he or she makes a loss, and in 2 of them, it's a gain. So what kind of taxation will we look at? What is the income that will be, taxed here? Will it be set off against the losses, or will they have to pay only on the gains that they've made in those 2 games?
I think from my understanding up till now, it's very clear that it will be on the net winnings, which means that, let's say you won 10,000 rupees and you lost 8,000 rupees while playing multiple sessions of the game, you'd actually pay tax on the 2,000 rupees.
Okay. So since it brings more clarity here and it's 5% of your revenues and also one of the segments where you were seeing high growth as well, do you think this clarity will be beneficial for the companies? You are saying it's beneficial for gaming industry, but will it be an issue as far as the consumers are concerned?
No, I don't think so. I think because it's a net winning. If it was on total winnings, not set off against what you lost, then I think it would be a much bigger challenge. Since it's on net winnings, I think it's fine.
Okay. Nitish, just hold on. We do have some numbers which are trickling in. HDFC's Q3 numbers are at the bottom of your screen. Revenues are up 29% at 15,230 crore rupees on a YY basis. I'll just take it back to the profit number that my team was flashing. So net profit largely in line with estimates at 3,691 crore rupees versus a poll of 3,728 crore rupees. Of course, we need to get more details here basis the calculations that our analyst will be making. So for now, it looks like an inline set of numbers. More details is something that we'll be requiring. Anything that you have picked up, Rima?
No, these are the only two numbers. HDFC Limited has already given us a business update. So in a way, part of the meat is already known. They had indicated that the loans assigned had gone up by 19%. The individual loans sold were up 30% on a year-on-year basis. And the dividend income has also seen a significant increase on a year-on-year basis at 482 crore. Just on the bottom line, there is a bit of a miss, not too much, 30 crores lower than what the estimate was. So it's still a decline seen on a year-on-year basis. Revenues are up 29%, but the number we focus on is the NII, the net interest income, and that is something that we still do not have. Last quarter, the company had reported very strong asset quality numbers. Abhishek was telling us in Q2, the asset quality was the best in the last 11 quarters. Does that improve from here on? For reference, the Q2 gross NPAs were 1.59%, while the individual gross NPAs were just 0.9%. Does it get better from here on? And of course, there's going to be that mega merger between the two, right?
So we'll of course get Abhishek in just a bit to run you through more numbers and analysis as well. These are the headline numbers for now. The stock is lower and trade by 2% odd. Let's get back to our conversation with Nitish. Nitish, thank you so much for patiently waiting by. You were making a point as to it will not impact the gaming community, so to say, and it will be beneficial for the companies as well or the industry as well. Can you tell us what kind of growth you're expecting in that 5% RMG or the real gaming business for you? And how could have this change been made even better than that? Are you satisfied with the tax rate that has been notified here?
Sure. So, from a Nazara perspective, there are three things that, we've been waiting for as far as the skill-based real money gaming business is concerned. One is clarity on the TDS and income tax aspects, which broadly has been achieved now. The second is the GST. And third is the general rules of what is a game of skill, what is a game of chance, and what is permitted and not. I think as you've seen in recent days, the MeitY has also been very active in putting out a draft regulation around online gaming. And we are very hopeful after all the stakeholder inputs that have been taken that a very balanced and positive regulation, will be released in the next few months and implemented. I think that will be a fantastic move. And I'm also hopeful that the long pending clarity on GST will emerge in 23, hopefully sooner than later. So I think with these three check boxes ticked, I think the opportunity for Nazara to really scale its business in real money gaming is very large. We already have one business in it, Open Play, which contributes to 5% of our revenue. But we've generally, as we've said many times, taken a very conservative approach to this business till regulatory clarity emerges. Also, this clarity will suffocate gray market operators who are very active in this space. It will help increase consumer protection, which means that the long-term sustainability and growth of this business generally in the industry also really improves. So I think from all these perspectives, this is a great step. It shows that the government is really looking at online gaming seriously, wants to bring clarity, wants to do the right thing, and I'm very optimistic.
But Nitish, while they have provided greater clarity and transparency, which is a great step, will this deter some of the small-time gamers? Because earlier you would not be taxed until your overall total income exceeded 10,000 rupees. Now you're going to be taxed even if someone wins 500 rupees or 1,000 rupees. So even at the lower end, there is going to be a tax. So do you think this is going to deter those people? Volumes may come down, according to you? Or go ahead.
Yeah, I think there might be a short-term friction potentially, but I think it will not really matter. People are playing these games for some entertainment, and they will continue to do so. A little bit of taxation is not a bad thing, and I think they will take it in their stride and move forward.
And just one question. This tax can be set off for the day that you're playing or for the full year?
I think my understanding as of now is for the full year.
Okay.
Again, there's a very large window that has been given. There are certain aspects in terms of, I think, if the consumer withdraws the winnings, then you withhold the tax for that period. To be honest, we are also still, learning all the nuances of the new regulation. But that's my understanding. Right?
There's no loophole as you see it now.
We're not trying to find anything.
All right. I think for that, we'll have to quiz the consumers, right? They're the ones who always find those loopholes. But thank you very much, Nitish, for joining in.
Okay, all right. So that's about the new taxation that we have seen in the gaming industry. We'll, of course, keep getting more analysis on this one. For now, we'll slip into a short break and get you more on the markets and a lot of stock-specific action on the other side. Still tuned in on Midcap Radar on CNBC-TV18. Well, HDFC on our radar reported numbers just a while back. Abhishek is here with the analysis. Abhishek?
It's operationally a weak quarter for HDFC Limited. The AUM growth is about 13.34% on a YY basis, which is the lowest growth that you are seeing in last 4 quarters. The sequential or quarter-on-quarter loan growth is at 1.6%, which is perhaps at a 6-quarter low, and the second lowest growth that you are seeing in last 22 quarters or about 5.5 years. So the growth is actually weak this time around. Coming on to the PNL, they have missed our poll both in terms of NII and PAT, and the other income has also declined massively on a sequential basis. So that is why you are seeing operating profit decline by more than 15% on a sequential basis. Asset quality largely stable. Net NPA ratio has improved on a sequential basis, but there is an hiccup in the gross NPA. So we need to watch what has actually happened. That gross NPA is at 1.8% versus 1.6% in the previous quarter. However, net NPA has declined to 0.8% versus 0.9% in the previous quarter. Spreads and net interest margin both have improved quarter on quarter. We are seeing the benefit of rise in yields actually playing out. However, operationally the loan growth is on the weaker side, both YOY and quarter on quarter. Back to you.
Okay, thank you very much for that. Max Healthcare numbers also up for you on your screen. But let's turn to the auto sector. Sector lead Maruti Suzuki reported their January monthly sales yesterday. It came out during budget day. We couldn't quite focus on it. But the crux of the numbers is that Maruti this time has underperformed the industry in wholesale growth and the retail sales growth. Exports too have seen a bit of a decline on a year-on-year basis. Earlier today, we had a chat with Shashank Srivastava, Senior ED, Marketing and Sales at Maruti Suzuki. We began by asking him about the latest sales print. Listen in.
Our retail growth was about 6%. The inventory levels at Maruti Suzuki was extremely low end of December. In fact, we had zero stock in the factory and about 28 or 29,000 vehicles in the network. That's like a really, really low stock. So obviously, it took some time for us to increase our wholesale because the production starts after our block closure, which the production started somewhere around 4th of January. So that was the first half where we could have done much more wholesales than what we did. And secondly, of course, we have also been affected by the semiconductor shortage of some of our models, which has led to a lower production in January. We have pending bookings of now 375,000 odd vehicles. There are a couple of shipments because this exports depends on the shipment, which sometimes get rescheduled. So maybe you will see the first week of February, those ships leaving, and that means the February first week numbers would be higher than anticipated and January numbers slightly lower than anticipated.
Okay, that's the word coming in from Maruti on their monthly numbers. But for now, we'll slip into a short break. We have a lot of earnings to track for you, so we'll do that after this short break.
Axera Sanitary Ware is the company on our radar. They posted a good set of Q3 numbers, revenue growth of 18%, profit jump of 31.9%, and 20 basis points of margin expansion. Ayush Bagla, the executive director at Axera Sanitary Ware, is with us on the show now. Thank you very much for joining in. Q3 has been a very strong performance. You've outperformed the industry as well. Could you tell us what led to this outperformance? Because it appears like Kajaria, Asian Paints have reported subdued numbers for the October to December period.
The seventh straight quarter of growth for Cera Sanitaryware, and we've not seen any uplet in demand. So some of the initiatives that were carried out over the last 5 years include a significant increase in new product development. So 39% of our current revenues is from products introduced in the last 3 years. And more importantly, 64% of our overall sales is from completely retail sales. So our project sales or B2B business is less than 30% of overall sales.
Okay. All right. So can you tell us, since you're talking about 39% of your sales coming in from new products, and most of it coming in from the retail segment as well, that's the overall sales, what does it mean in terms of growth for you? You had guided for 25%, you've already done 26% in 9 months, so you will be able to surpass it, but at what level? And margins as well, you had guided for 17 to 19%, you've done around 16% in 9 months. What is the outlook here? Will you be able to hold on to your guidance?
First of all, on the top line, the company had traditionally 3-4 years ago top line of about 1,250 crores for the year. We've reached 1,290 crores in 9 months. So you can map out the trajectory that we're going to achieve in the full 12 months. Then the margin expansion, PAT was always in that single digit 9.5%. PAT is now at 56 crores at 12%. Even EBITDA at 86 crores is at 18.44% with other income, which is, part of the 600 crores treasury that we have parked in safe instruments. And even if you take off other income, EBITDA is 15.99 or 16%, 72 crores. So on all fronts, there's been a significant improvement in margins. And if you look at the year ahead, we are definitely going to achieve the stated objectives on top line and margin expansion. And this is in an era where, there is increasing interest rates, etc. So we have not seen any kind of let up in demand. Our brand salience has prevailed. And, we have launched a new advertising campaign. So our share of voice is now equal to our market share. And, the product promise, the project differentiation, all that is
Yes, Ayush, we do get that. So now that you're talking about 1,200 crores being, or 1,270 crores being the 9-month figure versus annual figures earlier, what is the trajectory like? If you will be able to do more than 25% growth in FY23, what will FY24 look like with the margin for band? What it would be, because you're talking about a lot of cost-saving initiatives as well.
So when we hit 1,440 crores in FY22, we said we will double this top line. So we'll reach 2,900 crores in 40 months. And that's a growth trajectory of about 18%. So we stand by that now.
What is your current capacity utilization across the various categories, Ayush? And how is Q4 shaping up? Will it continue to see the kind of momentum we've seen in Q3?
Sanitaryware plant is operating at 105% of capacity utilization, faucetware at 115%. And in January, we have seen no let up in demand. So we have seen, on the working capital, we are the lowest in industry in the receivables. We are the lowest in industry in payables. So on all fronts, you're seeing a significant improvement from a company that is already a leader in its space.
Sure. So January growth has been 18% plus?
The January numbers I won't be able to talk about right now because it's not public information.
Okay, but no let up in demand, so we're going to take that comment. Ayush, out of time. Thank you very much for joining in, and congratulations on a very strong set of numbers that Cera Sanitaryware outperforming the industry quite handsomely in Q3. Out of time on Midcap Radar, Mutual Fund Corner when we return.